Disclaimer, I'm not a financial advisor and I'm not providing buy or sell recommendations. I'm just giving you my opinions. Please do your own research before investing.
Hello, crypto cowboys. Today I'm going to talk to you about trading strategies. Specifically, I'm going to focus on candlestick patterns. And we're going to look to see if we can identify patterns that will let you know whether a bullish trend is about to happen or a bearish trend is about to happen. Now, for those of you investing newbies, when you hear the bulls or a bullish trend, that means there is an assumption that the price is going to go up, and the bears means the price is going down. A little history about me. I used to work in a hedge fund. I was a trader. I traded FX, which is foreign exchange. And in the industry, a fairly large amount of people use technical analysis. And there's also fundamental analysis. Now, fundamental analysis is when you look at some of the underlying economics that's affecting the price of the asset and use that to make trading decisions. In technical analysis, you don't care about any of the underlying economics. You just trade based on the charts and other indicators on the charts. So today we're going to look at candlestick patterns, and I'm going to see if I can use candlestick patterns to identify any buying trends or selling trends. Now, we went over candlesticks in a previous video when I was talking about how to make trades in Binance. But now let's delve a little deeper. I have on the screen right now two different types of candlestick, a bullish candlestick and a bearish candlestick. Now, the bullish candlestick, as you can see, is the one that's clear in the middle. And that usually means that the price opened on a low and then went up and closed on a high. And as you can see, the open is the bottom edge of the rectangle and the close is the top edge of the rectangle. And the top of the line is the high during that hour, and the low of the line is the low during that hour. Now, I'm just saying hour because I'm assuming that I'm using an hourly candlestick bar. But you can, depending on the platform that you're using, change it to whatever you want. So let me just switch over to Binance quickly to show you this. So here on Binance right now, I'm using 4-hour charts. So that means every 4 hours, a new chart will be created. I could change that to anything. I could change that to a 1-day chart. I could change that to a 1-week chart. If it's filled in the middle, that's a bearish pattern. No matter what color it is, in Binance the color is pink, but it could be any kind of color. It could be black, it could be blue, whatever. But if it's filled in the middle, then that's a bearish candlestick. And if it's clear in the middle, then that is a bullish candlestick. Before I get started showing you the patterns, I just want to give you a fair warning. A lot of traders use this, but it's not an exact science. Definitely do your own research and don't just follow everything blindly. So the first one I want to look at is called the hammer. Now, the hammer is a candlestick pattern that's used to indicate the end of a downward trend and the beginning of an upward trend. Essentially, it indicates a reversal from a downward trend to an upward trend. And what does it look like? If you look at the chart, you can see a long shadow with a short body, followed by a confirmation bar. That's what a hammer is, and that would indicate a reversal. The trend was going down, then you see the hammer, a confirmation bar, price going up. Sometimes you'll see a shadow at the top of the bar instead of at the bottom of the bar. This is known as an inverted hammer, but it's still an indication of the end of a downward trend. So the next one I want to look at is known as bullish engulfing. If you're in a downward trend and then you suddenly see this pattern, that is a downward bearish candlestick followed by a bullish candlestick that engulfs the bearish candlestick. In other words, it is larger than the high and lower than the low of the bearish candlestick. This is known as bullish engulfing, and it could be an indication that the downward trend has ended and the prices are about to start going up. The next pattern I'm going to show you is called the piercing line pattern. This one also happens in a downward trend. And the way it works is you're in a downward trend. You have a bearish candlestick, and then the next candlestick that opens will open lower than the bearish candlestick, but buying pressure pushes it up to somewhere in the middle of the body of the bearish candlestick. The next one I'm going to show you is known as morning star, another candlestick pattern that if you see during a downward trend could be an indication of a trend reversal. You look at 3 different candles. The first one is the bearish candle. The second one can either be a bearish or a bullish candle, but the important thing is it has to be a doji. Now, a doji is a very, very short candlestick, so a very small one, tiny body, and then followed by a bullish candle. So if you see a bearish candle followed by a tiny candle and then a bullish candle, this could be seen as a role reversal, and it's known as morning star. Finally, the last pattern I want to show you today is known as 3 white soldiers. Essentially, after a downward trend, if you see 3 consecutive upward trending candlesticks, 3 consecutive bullish candlesticks, that is seen as the end of the downward trend and the beginning of a reversal. Quite frankly, for me, this is really the only candlestick pattern I look at. If I see this, I usually look at this as an indication that maybe I should get in. Those are some of the candlestick patterns that you can use. Those are some of the candlestick patterns that technical analysts use to trade. So the next time you're on Binance or on Bittrex and you're trading, look out for some of these patterns. Maybe they can help you make some extra money. Happy investing.